Hello everybody, this is Eddie Ghabour, Managing Partner of Key Advisors Group, and today I wanted to talk to you about the debate that's going on Wall Street right now in regards to whether deflation or reflation will win in the fourth quarter. Right now I would have to say that consensus has been saying deflation, deflation, deflation. We are in the other camp right now. We'll have to wait and see who is right. We think it's more of a reflationary sign that's happening. And I'm going to touch a little bit on why we feel so strongly about this and why we feel as though consensus is wrong. First off, if we were going into a deflationary environment, we would want to, in our opinion, be out of your more high beta, high risk stocks, because deflation is not an environment where you want to go into, where you're seeing a real slowdown economically. So things like small caps would probably really underperform. Your recovery plays like your casinos, airlines, those types of sectors would obviously, in my opinion, underperform. And then you'd probably start to see a little bit of compression coming in the commodities market, especially when you look at oil, right, in regards to what oil prices have done. So consensus still seems to be very deflationary in regards to what their viewpoint is on the market, and really coming into the fourth quarter playing pretty much defense. And we really have the opposite point of view, and the reason why we have that and why we think reflation, and actually for our clients, we've been increasing the risk of client portfolios on the equity side in September, and we're doing it again in October, because we really think we are poised for a pretty big snapback rally in the reflationary trade. And I think you're getting a lot of signals that's pointing to that. Our overall thesis in regards to why we have such a strong conviction on the reflationary trade is really due to several factors. One is the COVID cases that have really come down quite a bit. When you look at the rate of change on COVID cases, they have plummeted, not just here domestically, but around the world. And that means that people are going to start going back out again. You can kind of talk and think of it really as a second reopening, because we had it in the beginning of the year, and then we had the Delta variant really spike, shut certain parts of the country into a point where they had to start increasing restrictions, human behavioral changed again, and now that the cases have plummeted, we're starting to see a pickup in consumer activity. And we think, humans are creatures of habit. They don't want to be in a lockdown mode. They want to get out. They want to spend money. They want to do the things and have a normal life as much as normal, versus where they were in the summer when the Delta variant was spiking. The other thing that I think people are really missing, and I say this respectfully, is we are now getting ready to open international travel to Europe to come here to the U.S. Now, there's going to be some restrictions. More than likely, they'll have to show that they've been vaccinated or have a negative COVID test. But the bottom line is, not only are we going to be reopening again here in the fourth quarter, but we are now bringing in international demand. And that international demand, from what we've seen with early bookings on flights, seems to be pretty robust. And that's something that's been missing in the U.S. economy for a while, because we've been very restrictive on international travel. So when you take a look at the Delta cases really coming down and COVID as a whole really coming down, you're looking at more and more folks that are vaccinated, which lowers the chance of another massive spike, in our opinion. We're not doctors, of course, but just following the data. And then you have the international demand exposure to that, and we should see a really big reflationary trade here in the fourth quarter. We think the fourth quarter could look a lot like it did in the first half of this year, in what you saw commodities really rip. You saw the reflationary trade with small caps and cyclicals really rip. So right now, when we take a look at the underlying fundamentals, yes, there have been some mixed signals being sent out, with the VIX being very volatile and moving with quite a wide range, I must say. You've seen interest rates all over the place, and you've seen a lot of bearish consensus. And I guess I'm more of a contrarian, so I really like the fact that most people have an opposite viewpoint than ours in regards to what the fourth quarter is going to look like. Next year, we think in the first half could look completely different. I'll address that at another time. But for right now, we think reflation is where you need to be. And again, everyone's risk tolerance is different. This is not a recommendation for you to change your portfolio, because I don't know anything about your specific scenario. I'm just sharing with you our viewpoint on the fact that we think reflation is going to win over deflation in the fourth quarter. Now, time will tell if we are right. If we are right, our positioning should do extremely well. If we're wrong, our positioning will not do well because we are pricing in reflation. And if we are wrong, then there will be a price to pay for that. So hopefully our thesis is correct and our clients will enjoy a very nice fourth quarter. With that being said, that's our viewpoint on why we think reflation is going to beat deflation here in the fourth quarter.